When taking a loss, most people's first instinct is to get back the money lost at all costs, which often makes things worse. Shift your perspective from money-oriented to process-oriented. Create a mindset of being process-oriented. I repeat, create a mindset of being process-oriented. Again, create a mindset of being process-oriented. Acceptance will help you to become a better trader. 1. Accept to stay at the sidelines. 2. Accept that you will have losses. 3. Accept that you don't catch the bottom/top. 4. Accept 10 losses in a row. 5. Accept that your next trade will probably be a loser. Charts work if you let it speak to you. Seeing charts is easy, implementing what you see is where most struggle. If you let news, opinions, exit polls interfere, then you are heading into a lot of trouble. Remember, the whole idea of seeing charts is to avoid all of the above. If your mindset is compromised, here's one of two things you should be thinking of doing. 1. Take a break. Never be too proud to take a break to gather perspective. 2. Reduce your position size. Trade smaller and smaller until you get your mojo back. If you cannot accept to lose in trading, you will never make big money. Losing is essential to win. 3 types of markets. 1. Trending markets. 2. Trend-changing markets. 3. Markets that swing more than 2 times in one day. Turtle soup bulls and bears for choppy markets. 4 buys. Today must make a 20-day or period low, the lower the better. The previous 20-day or period low must have occurred at least 4 trading sessions earlier. This is very important. After the market falls below the prior 20-day or period low, place an entry buy stop 5 to 10 ticks above the previous 20-day or period low. This buy stop is good for today only. If the buy stop is filled, immediately place an initial good till cancelled sell stop loss 1 tick under today's low. As the position becomes profitable, use a trailing stop to prevent giving back profits. Some of these trades will last 2 to 3 hours and some will last a few days. Due to the volatility and the noise at these 20-day or period high and low points, each market behaves differently. Re-entry rule: if you are stopped out of the trade, you may re-enter on a buy stop at your original entry price level. Recrossover of the 8/34. 4 buys. The 8-day EMA crosses over the 34 exponential moving day average to the upside. Place a stop loss below the 34 MDA and trail the stop up American Samoa. It becomes profitable. For swing trading, look at the 34-50 and 200-day moving averages. Gemstone 22 Pearls of Financial Wisdom Gemstone. 1. Bonds are for storing wealth and equities are for creation of wealth. 2. In my opinion, the biggest asset one can have is zero debt. 3. The greatest discipline in personal finance is living below your means. Asterisk 4, as Ben Carlson says, emotions cannot be back-tested. That's why past bear market always looks like opportunities asterisk and future ones scary. 5. Early financial independence and early retirement are completely different. To me, the former is a blessing and the latter is a curse. 6. Asterisk don't think how it would have been if you've started 10 years ago. Start today and visualize how you would asterisk feel 10 years from now. 7. The neighborhood we live determines our lifestyle and spending. Need to be careful in choosing one which matches our goals and personality. 8. Paying minimum balance regularly on credit card is the maximum sign that you're getting into debt trap. 9. Many are long-term investors till next bear market. Asterisk 10. Don't take aggressive bets. Take measured risk. Remember, one blunder can push you back by a asterisk decade or more in terms of wealth. 11. Big money can be made through high savings, wise investing and lots of patience. 12. One sign of progress in individual investors' portfolio is no churn or very less churn. 13. Trying to get rich fast is a foolproof way to lose what we have. 14. Losing opportunities is far better than losing money. Don't invest in fads. 15. Making as much money as quickly as possible is not an investment strategy. Unfortunately for most of us, that is the strategy. 16. Aggressive strategy cannot be a substitute for high savings. Save high and take moderate risk than saving less and taking high risk. 17. The day we realize not losing is as important as winning, we would stop blindly chasing returns. 18. Good periods are more than bad periods. By not timing, though we go through bad periods, do not miss even a single good period. 19. We'll stop looking for quick money the moment we consider stocks as businesses and realize that our wealth grows in line with business growth. 20. There are periods of high returns, low returns, no returns, and negative returns. We need to go through all these to get long-term returns. 21. Listening to market forecasts is not only useless but can be very harmful too, if you start acting on them. 22. The hard truth is only around 3% of our population are in a position to aspire for financial independence. Don't waste this rare privilege. Above anything else, drop the get-rich-quick mentality. Then, stay in the game and keep trying. You don't learn to play the piano at a professional level in a few months. Unless you're a natural, and even then. Trading is the same. It will take time. There will be plateaus. A loss is the price you pay for being wrong. But a loss can also be a marker of growth if you let it teach you. What you do with the experience is ultimately up to you. The key difference between American and European options relates to when the options can be exercised. A European option may be exercised only at the expiration date of the option, i.e. at a single predefined point in time. An American option, on the other hand, may be exercised at any time before the expiration date. 7 things I have learned about trading. 1. Market is the best teacher. 2. Learning will never end. 3. Money comes in bunches. 4. There's no holy grail. 5. I want to do this until the end of my life. 6. Everybody can learn to trade. 7. Most traders lose money. How to work on your mindset every day. 1. Write a diary about your trading decisions. 2. Control behavior with a checklist. 3. Talk to yourself positively and constructive. 4. Make a plan to reach goals and break it down to tasks. 5. Write sticky notes with reminders. Do not forget that you do not need an uptrend in the indices to make money in stocks. A sideways trend is enough. Do your homework and find the stocks which show a high relative strength. They often accelerate if the indices are turning up too. I don't trade any stock. I don't switch my style. I don't need stock tips. I don't trade multiple systems. I don't follow every fashion. Instead, I am focused on my trading niche. I am a specialist. I trade my system. I will do the same things for 20, 30, or even 60 years.